in our market panel now. We got Paul Pagnato and Yu-Dee Chang. Gentlemen, great to see you both. Paul, I want to go to you first. We're going to talk about the Fed in a second, but first I want to talk about the tax changes that the Congress finally decided on. You think of who's going to hurt the least, because nobody likes higher taxes. Nobody likes higher taxes. But who's going to hurt the least? And I think of the large cap companies. Because of those changes, because they are probably hurt less than most people, is that where you're putting your money or focusing your money, to the large caps now?
Dave, that is one of the areas. The large cap multinationals have over 50% of their revenues coming from overseas. So they're not going to feel the drag that a lot of the small companies will here in the United States.
Okay, but let's talk about what will feel the drag. I mean, if you get the sense that we're going to have some real problems in the U.S., are you a little frightened about certain pockets of equities, and if so, which ones?
So overall, we're bullish, but the area that I am concerned with are the small caps. When you have a situation where personal income taxes are going up like they are, small caps and mid caps usually lag.
All right, Yu-Dee, I'm thinking about whether or not we have worked all the bad news into the stock market. Clearly yesterday and the trading day before that, you got the impression that we had, and that we were due for a run-up. However, you look at what happened with the Fed today. The Fed minutes suggesting that they're not going to be printing any more money going into next year, that is 2014. They may stop some, maybe even mid-year printing money, and we saw the interest rates rise as a result of that. Is that a concern? Is that one worry that hasn't been worked into the stock market?
Yeah, I think so. That is something that's a little bit new to the market. But don't forget, either way, we're still talking about a little bit down the road. And also, Bernanke pretty much came out and told us, right? As long as inflation stays below 2.5%, as long as unemployment rate stays above 6.5%, this easy interest rate policy is going to be here to stay. So this so-called risk trade concept is still there for now. It might be changing, like you said, mid-year, a little bit down the road. For the time being, still there. I think there's still a lot of catch-up investing that needs to be done, especially by institutions.
Yu-Dee, because that's what we want you to show us the money. Where is that catch-up investing going to go?
You know, a couple of things. I think it's going to go to the lagging sectors of the last year. I think one being, think about this, housing starts. The housing market has revived a little bit. Something related to it is the durable consumer durables. If you think about it, they haven't been doing that well last year. As a matter of fact, they lagged the market last year. People are put off their buying of the consumers' durables. They're going to the consumer electronics. But I think as the housing starts, as the housing market picks up, people are started getting into these appliances, furnitures. So I like that sector, consumer durables.
So that's specifically, stock-wise, Yu-Dee, we're talking about Whirlpool and companies like that?
Yeah, I like Whirlpool a lot. I think it's one of the major appliance store, of course. And then I also like a furniture and actually accessory store, Leggett & Platt. I think these two are the leaders in that sector.
Paul, you feel that perhaps some leadership might come in the real estate world. That's a broad statement. Let's try and drill down a little bit. Would it be in the commercial area? Would it be in residential, single, double family dwellings?
The areas that we like are in private real estate, specifically some of the most recession-resilient properties. So we like student housing, we like self-storage, and we like some senior living centers. All the demographics there are very, very strong.
What about the jobs number? We got that coming out. I mentioned that before, Paul. Are you going to be influenced at all in your decision about investing with regard to equities based on what happens with that number? If we get a terrible number tomorrow, is that going to affect you at all?
No, we're long-term investors, and what happens with the jobs report is not going to impact our outcome. And we do think that the jobs report that's going to come out tomorrow, we're not expecting any huge surprises on the upside or the downside.
Yu-Dee, what is the #1 mistake you believe investors have the potential to make in 2013, but that you want to warn them against?
Yeah, you know what? I really think based on the environment, it's still not a momentum investing market. So chasing the momentum, chasing the high flyers, chasing a stock, the market that's already gone up, is going to be another mistake. Buying low, selling high. Such an easy thing to say. I understand that, but it's very difficult to do. But it's exactly the things to be done. You got to buy dips and sell rallies. Right now, I think we're still in the middle of a rally, so I think there's a little bit more to go. But throughout the history, actually over the past, I would say about 45 months, I'm telling you, about 13% were sold. Upside is ready to be sold. About 7.5% downside is ready to be bought.
Yu-Dee, are you still 50% in cash?
Yeah, right now we are. We actually pulled back to all the way to about.
Waiting.
Yeah, we're still waiting a little bit. I like the market, by the way. I think this year S&P is going to finish up about 15 to 17% for the year, taking us to about 1670. But right now,
hold on, Yu-Dee. If that happens at the end of the year, I would assume then you'd only be about 10% in cash, right?
You're absolutely right. David, you're absolutely right. As the market go higher, I want to take my profit. As the market go lower, I want to buy into it. You know what? We actually have been doing that, not just saying so. Again, not easy to do. Some of our clients sometimes get all freaked out by us saying that. What? You want me to buy right in the middle of a dip? Yes, we want you to buy.
Well, exactly.
What? You want me to sell out? Yes,
that's what
exactly
Buffett
the way
does.
to do it.
Thank you both, Paul
Thanks, guys.
Pagnato and Yu-Dee Chang.
Appreciate it, gentlemen.
So today.